The United States stock market is already in a correction mode, and it has been for a few weeks now. Well, the first quarter is about to draw to a close, and it appears likely that the GDP is going to be negative. So we could very well already be in a recession. If that's true, this correction could easily turn into a bear market of some variety. But you're a long-term investor, you say, so you want to be invested for the long term. Well, if the United States stock market is going to go down, can you take some of that equity exposure and put it somewhere else? Well, Europe is offering an interesting perspective at the moment. Let's take a look at that. On the screen, I've got two ETFs. The blue line represents United States S&P 500, or SPY is that ticker. The green line represents Europe. That is a Vanguard Europe ETF, VGK. And you can see that over the last 10 years, out of these two choices, the United States has clearly been the dominant player. However, if we look at year to date, that script has been flipped, with Europe clearly on top with a positive 13.5% return, whereas the S&P 500 is negative 3.5%. If we now zoom out and take a look at the weekly chart, so we can look at data now all the way back to 2005, what I really want you to see is after the global financial recession, Europe has just kind of moved sideways, and they have not been able to take out the highs from the pre-global financial crisis. But in addition, what I want you to notice is these series of three higher lows, creating a little bit of a trend. One of the questions I get every once in a while is, how in the world do we track all of the things that we track? Well, we categorize them into different lists. This is our core watch list. So when we want exposure to a broad basket of equities, this is the list that we use to start our search. Where do we find the S&P 500 in that list? In the middle of the pack. But what about the Magnificent Seven? Where are those guys? They're all the way at the bottom of the list. And of course, we find Europe is right there at the top. So while the United States stock market has been in a correction these last several weeks, Europe is at multi-year highs. So the question is, can we expect European equities to continue to perform well even if the United States stock market enters into a bear market? Well, I don't know that expectation is the right word. However, given how strong Europe has been here recently, despite the pullback in the United States stock market, it certainly suggests some relative strength in the near term. And sometimes near-term relative strength turns into long-term relative strength. So at a minimum, we need to be paying attention to Europe and potentially looking for an opportunity to hop on board. If you have any questions, by all means, let us know.